ለመማር ወደ ትምህርት ተቋም መሄድ ግድ አይደለም።
ናሽናል አቪዬሽን ኮሌጅ
ራሳችሁን ከኮሮና ቫይረስ ወረርሽኝ እየጠበቃችሁ በቤታችሁ ወይም በተመቻችሁ ቦታ
በኢንተርኔት አማካኝነት በኦንላይን ትምህርታችሁን መከታተል ይቻላል።
ካናዳ ከሚገኘው ኢንተርናሽናል ኤር ትራንስፖርት አሶሲዬሽን አያታና
ከእንግሊዙ ኢንስቲትዩት ኦፍ ኮመርሻል ማኔጅመንት ICM ጋር በመተባበር የሚሰጡ ትምህርቶችን ተከታትላችሁ በ6 ወር ጊዜ በዓለም አቀፍ ደረጃ ተቀባይነት ያለውን የስልጠና ማስረጃ ባለቤት መሆን ይቻላል።
ከኢትዮጵያ ሲቪል አቪዬሽን ባለስልጣን ሙሉቅና ባገኘንባቸው የፍላይት ኦፕሬሽን እና የሆስተስ ስልጠናም በምዝገባ ላይ ነን።
ጥያቄና መልስ፣ የክፍል ስራዎች ብሎም ፈተና መፈተን ክፍል ውስጥ እንዳላችሁ አይነት
ልምድ ባላቸው መምህራን እየተማራችሁ
በኦንላይን ባላችሁበት ቦታ
አድራሻ ከ22 ማዞሪያ ወደ ሾላ ገበያ በሚወስደው መንገድ 150 ሜትር ገባ ብሎ ናሽናል አቪዬሽን ኮሌጅ
የናሽናል ኤርዌይስ እህት ኩባንያ
ህልሞን እውን ያደርጋል።
So allow me to share the screen on our discussion for today, which I think all of you have. Is that clear now? Okay.
Yes.
So let's go to today's discussion. And we had briefly talked about management accounting yesterday as part of the introduction. So from the slide, you can see my first introductory item is the definition of accounting. Because this is management accounting and it's basically accounting, we want to understand what it is so that when we talk about management accounting, we know the background of management accounting as a field and why it's important to us as managers. Now from yesterday's introduction, I understood that we have people from various disciplines. We have leadership, we have marketing, we have finance and all that. So it's not only purely accountants who are in this course, but it's a group of people from various fields. So it's important that you understand the genesis of management accounting. Now from yesterday's discussion, I would also like to inform you that financial accounting is synonymous with accounting. So when you talk about accounting, anybody talking about an accountant or accounting, the first thing you think of is the person being able to prepare financial reports, to keep records of accounting and prepare financial reports, which is now an aspect of financial accounting. So when you talk about accounting, basically, is financial accounting. I remember somebody asked yesterday, which one comes first between financial accounting and management accounting? So I would say in this case, financial accounting comes first because financial accounting is just the accounting that is normally referred to. So according to, we have various definitions about accounting, and the basic ones that we use in the accounting profession is the American Institute of Policy Accountants definition, which defined accounting as the act of recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events, which are in part of at least of a financial character and interpreting the results thereof. So the key items we can highlight from there is accounting is a process that involves recording, classifying, and summarizing, and reporting, basically reporting. And this reporting is done in monetary terms. We are reporting the transactions that have taken place in the organization for a given accounting period, and then the reporting is done in monetary terms. So we need to understand it from that point of view. That is a process that involves recording, classifying, and summarizing, and reporting. And then the interpretation. Interpretation also is an aspect, part of the definition, because whatever we are reporting in terms of the figures have to be reported. And the reporting is done through the financial statements, which now the users apply them by interpreting and making decisions based on the interpretation they will have given it. Another definition is the Accounting Standards Board of 1991, which defines accounting as the provision of information about the financial position, performance, and financial adaptability of an enterprise that is useful to a wide range of potential users in making economic decisions. So this is also another definition, which is more or less like that one that is given above. And but it brings in the idea that it's a process that can be used to report on the financial position and performance of the organization. And it's useful to a wide range of users. So it does not target a particular user, but it's provided to a whole range of users who may have different reasons why they would be interested in these reports. And the reason basically is to make economic decisions about the organization. So in summary, we have these items, like I said, and then which are just emerging from our definition that we have above. Now, I would like to request that if you have any questions as I proceed my discussion, I'll be stopping at some point so that if there are any questions we can ask or any clarification you require me to give, I can give. But basically, I will be going through the slides. I'm assuming you're also having the same document so that at some point, I will break off so that we listen to any questions, any need for clarifications, which will be able to help us move forward. Now, accounting, just like any other specialization or any other field, it has an objective. And as I said, accounting and accounting in itself is just financial accounting, according to what we discussed yesterday. I'm trying to see whether I can, just a moment. Are you able to see me? Okay. Now, the objectives of accounting. Accounting plays a dynamic role in the success of any business. And the core functions of accounting, as we discussed yesterday, is to ascertainment of profit or loss. If you don't have an accounting function in your organization, then you will not be able to ascertain whether you have made profits or losses at any given time. So it's important that we prepare accounts so that we are able to tell at any given time whether we have made profits or losses in that accounting period. So this helps the organization plan and see how to control the operations so that they make profits. Every organization is there to make profits, but because sometimes things don't go the way they may have planned, so they need these reports to help them improve or check on where they need to improve. Then secondly, to facilitate the credit transactions. When you purchase goods, credit transaction is like when an organization is seeking for a loan, for example, a credit facility. Normally, they will be asked to provide their financial statements or balance sheet statement so that they are able to evaluate the organization based on their performance and see whether they are qualified for a credit facility or not. So this statement shows the organization, the organizations it shows the number or the how many in terms of the amount the creditors the organization have and the debtors the organization have. So the accountants will define, but we don't need for that. We don't need that for today. The debtors and the creditors. A debtor is the one who owes the organization at a given date, and a creditor is the one the organization owes at their given date. So this information is important for any credit providers to evaluate the viability of the organization to repay back their loan facility. Then assessment of tax. We have different types of tax. We have income tax, corporate tax, excise duty, customs duty, VAT, and all that, value-added tax. So all these tax amounts that you need to pay at a given time or at the end of the accounting period can be established through the accounting process. So it helps us determine the amount of tax that we need to pay to the government. For example, the corporation tax is pegged on the profit that is made during the accounting period. So we need to know how much profit you have made and then apply the tax that we need to pay so that we determine how much we need to pay in terms of tax. Then we have evaluation of assets and liabilities. All right, we need to know at any given time how many debtors, how many creditors do we have at a given time so that we plan for that. We plan or we know who are our debtors that we need to chase and how we need to talk to them. If they are creditors, we can decide on how we need to improve on our terms of engagement with the creditors. Okay, so this is now where the policy formulation comes in, because that's the work of a manager to formulate policies. So policies to do with our creditors, our debtors are part of the management accounting aspect. Then we have a tool for control. Accounting information will give us areas, all right? Like if you can accumulate the cost, we can control, we can decide where to control the cost and how, all right? Through the accounting information. So it's important that we get this information or we prepare this information so that we can improvise ways of controlling whatever we can control so that we are able to improve on our profitability. For example, there are some operation activities that can be outsourced or internally produced. So those are decisions that are made based on the information that we get through the accounting process. So, and the decisions that we are supposed to make as managers. Now, financial accounting and management accounting. Financial accounting is the process of recording financial activities, the business and of the business, and reporting summarized information to its users for decision-making purpose. So here we use basically the accounting standard, the accounting standards that guide the preparation of these reports. As we had discussed yesterday, we saw that one of the key differences between financial accounting and management accounting, financial accounting is highly standardized because most of the practice that we do or the statements that we produce are highly standardized because there's a given format by the standard that has to be complied with whenever we are preparing these reports, unlike the management accounting. So that is very unique with financial accounting, and which we're now saying is just the accounting that we've been talking about. So management accounting, on the other hand, is a field of accounting that deals with the development of information to be used specifically by the entity's management in discharging its managerial functions. So you remember we are talking about the organization's management, not any other manager who is an outsider. So this information is internally utilized by the internal managers of the organization. So other managers, if they're interested in the performance of the organization, then they will go for the reports that are prepared through the financial accounting field of accounting. But management accounting is basically information that is consumed by the organization's managers. That's why we are saying specifically by the entity's management in discharging their managerial functions. Yesterday, we alluded about the managerial functions. For planning, we have controlling, we have directing, we have communicating, we have motivation, and all these are functions of managers. And I'm sure you've come across this in your areas of study. And it's very important that this information is availed through the management accounting process to managers so that they're able to make informed decisions. It utilizes the techniques of both budgeting and cost accounting. So one of the topics we are going to address is budgeting, and then we have also the product costing. So, and along this, we are going to see what is the definition of cost accounting and what is budgeting. Now, managerial functions include formulation of policies, planning and controlling activities of the organization, decision-making on alternative courses of action, disclosure to employees, and safeguarding assets of the business. So among others, we are not saying these are the only functions that managers prepare or are responsible of, but we are saying these are the decisions that, some of the decisions that they have to make, like formulating policies, which policy is the correct one at any given time. And then planning and controlling, as we know, then decision making on alternative courses of action. Like I said, planning, or deciding on whether to abandon a project or continue a project is one of the decisions that managers make based on the managerial accounting information. So management accounting is the same as managerial accounting. Different books refer to it differently, but they mean one and the same thing. Cost accounting is the process of determining the cost of each product or service of a business. Now, costing can be done on a single unit, and costing can be done on a whole department. It can be done on a whole line of production. So when you talk about cost accounting, is the process of determining the cost of each product or a service of a business. So that is what costing is all about. So it involves evaluating of the profitability of each product or service and making recommendations for controlling costs. So costing, we can give different scenarios. We can vary like the variable cost of an item or a product, so that we do a sensitivity analysis. We can do a sensitivity analysis as managers and then be able to settle on one that is more preferred for the organization, because every organization has its goals. And as managers, before you make any decision, you must set your objectives, isn't it? Every decision must have objectives. So you must set the objective. And if you want to achieve, like, for example, the profitability from the whatever project that you want to establish or to start, then you need to do an evaluation, supposing variable cost changes from this to this. And we shall do that when we are looking at the CVP analysis as one of the topics that you're going to address here. Then what is a budget? Budget is a finance and quantitative statement of an operational plan related to a specific time period, which is to be followed during the budget period in order to achieve specific financial objectives of an organization. So you can see it's a financial tool, because budgets are normally expressed in terms of figures. So you can show the items like quantities of units that are planned to be produced, and then the costing per unit, and then now giving the total expected production cost and all that. So that is part of the budgeting. It's a budgeting, it's a finance tool that helps in planning and the planning for operations, the future operations of the organization. So a budget normally comes before the implementation of the project, or the period before the implementation of the budget. So there are this planning for the budget and all that steps, which you are going to see when we look at the topic budgeting. Now, budgeting is the process of evaluating what has taken place and preparing plans and goals for the future. It involves formulation, preparation, and implementation of operational plans for a given future period and expressing them in monetary terms. So because we use figures normally to understand what is happening between operations, different operations, or within different operations. So that's why budgetary is important that they are expressed in terms of figures and in monetary terms, because and that's why it qualifies to be an accounting item, and because it's a unit, its unit of measure is in terms of money. So that is very important. Then we can conclude by saying management accounting draws its data from financial and cost accounting systems. It uses all available information in order to advise management on matters such as cost control, pricing, investment decisions, and planning. So that is very important because management accounting, as we discussed yesterday, it cannot be a standalone process. It has to get data from both cost accounting and financial accounting, so that it avails the information to the management to enable them make decisions for the organization. That just gives us a hint of what management accounting and how it relates to other fields of accounting, like cost accounting and budgeting. From our definition, we saw that it mostly uses the budgeting and cost accounting aspects of management. So budgeting is normally done in the accounting, the financial accounting aspect of the organization. But you realize that even to prepare the budget, you have to gather information from all these other departments, like the human resource, marketing, production department, for you to make a comprehensive budget. Budgeting, as you can see, it can be we have short-term and long-term budgets that will take us for probably a full year. And we have budgets that are done probably on monthly basis. So this depends on the organization and the policies of the organization with regarding to budgeting. At this point, I will invite any contributions based on the discussions that we have made. Any contribution? If you have any contribution, just show up your hand, and then I will unmute you so that you can contribute, so that the rest can hear. Any contribution, any observation, anything to contribute on what we have discussed? No guess?
Yes, Doctor.
Any observation? Yes, any contribution, observation? Are you with me?
Yes, I'm with you.
Okay, how about
Hello.
yes.
I have a question.
Yes, please.
I think in the
That is
Solomon. That is Solomon. Hello.
sorry, are you the one talking, Saul?
Solomon, yeah.
Yes. Can you come up now?
In managerial accounting, there are different small parts that are costing, budgeting, and so on. My question is, what's the scope and the techniques in the managerial accounting and in the cost accounting? The technique, what's the different techniques?
So you're asking if there are different techniques?
Yeah, the techniques, the costing technique and the managerial, as well as the budgeting is related with planning for the futures. Also the costing is for pricing to maximize the profit. But what is the techniques, the difference between them?
Okay, so he's asking what is the technical difference between cost accounting and management accounting. Remember yesterday we said cost accounting is an aspect of management accounting. And we said management accounting is the process of provision of information to managers to enable them make decisions. And the work of managers, we have said, is to make decisions. So how do they make these decisions? They rely on the information that is provided through the management accounting process. So cost accounting is one of the one of the processes through which this information is availed to the managers. Actually, it starts with cost accounting, because it starts with cost accounting, then the cost accounting provides to management accounting. Management accounting is just the information that is being utilized by internal managers to make decisions. So if you look at the definition of management accounting and you look at the definition of cost accounting, you can easily see the relationship. Cost accounting is an aspect of management accounting. It's not in isolation with management accounting. Okay, it's just like I would say accounting clerk and the accountant. They do basically the same, but the accounting clerk does the technical aspect of accounting, like the recording and ledgers and all that. But you find accountant probably is now the one now bringing all these recordings and be able to produce the statements. So that is basically what cost accounting is with management accounting. Cost accounting is a function of management accounting. I would say that. It's a function of management accounting. It's not that they are technically different. They enhance each other. They enhance each other. That means without cost accounting, we may not achieve our objective for management accounting. You get it? We may not achieve the objective for management accounting. So cost accounting is a function of management accounting. I don't know whether we are together, Bwana Soli?
Yeah, Solomon, yeah.
Yeah. Any other question or comment? Any other question or comment? Brooke? Brooke, yes.
Yeah, it's good. It's good lecture. I'm happy.
Okay.
No question here.
Thank you. Tekachiu? Wachiso? Hi, Manot. Hi, Manot. Hi, Manot. Tadesi.
Yes, yes, sir.
Yes, yes. Any comment?
Yeah, can we explain this way maybe for the previous question?
Yes.
In the cost accounting side, that means accumulation of cost elements of a certain product to determine the production cost of that specific product. So accumulation of all the cost elements. The cost elements might be as you said, the fixed cost and variable costs.
Yes.
So just accumulating the cost elements and determining the cost, the cost of a certain product is the cost accounting through financial accounting. You can determine this even through financial accounting, this cost accounting portion. You must get all the transactions from the financial accounting side and determine the cost of production through this cost accounting procedures. After that, you use these cost accounting inputs for management accounting purpose. That means you may require some specific requirement. Just the process of transferring that specific requirement of the cost accounting and financial accounting inputs to the manager, that is to the decision maker, is the management accounting perspective. So I understood this way. So I just want to comment this.
Thank you. You're right, Heimanot. It's an accumulation of cost items of a product or a service, all right? And as from the definition I've given, it's a process of determining the cost of each product or service. So in fact, our next topic will actually be addressing now the cost accounting, because we need to understand the cost elements, the cost classification, and all this, and how we can go about accumulating costs for various for an item or a product for that matter. Any other comment? Anybody else with a comment?
Yeah.
Johannes.
Is that okay to comment?
Anybody else with a comment?
Yes, doctor.
Yes, doctor.
Yes, welcome.
Yes, doctor.
I don't have any comment actually.
All right. So we can continue with the...
Can I proceed? Can I proceed?
Yeah?
Galaxy 8.
I can...
Galaxy 8, can I proceed? Can I proceed?
Okay,
Just
proceed.
to comment on
Yes.
cost accounting. Yeah, I'm rule second.
Yes.
It's mentioning Galaxy 8, but I'm rule second, okay? Rule second. So when we see cost accounting, it should actually be a subset of management accounting, because management account, we take into account the not only cost accounting, but budget accounting. But whenever we say cost accounting, it's only related to cost-related issues. That is an information. But whenever we say management account, it's not only cost-related, it's also another budget-related points, which gives us the basic decisions as a manager. On the top of whatever you have mentioned.
Okay, thank you for that additional information. We are saying management accounting looks not only at the cost, but it has even other things it looks at other than the cost. So that's why I said cost accounting is an aspect of management. It's one of the aspects of management accounting. All right. You cannot talk about management accounting without cost accounting, because they're highly linked, because how the decision that whatever you need to provide to managers to make decisions must have a cost implication, which actually is generated through the cost accounting process. Okay, thanks for that contribution. I would like us now to move on and look at the objectives of management accounting. We said yesterday when we were discussing management accounting and financial accounting, we highlighted some of the differences, but we said each one of them has its own objective. Financial accounting has its objective, which is key to provide information for external use, but management accounting is to provide information for internal use by the organization's management. Now, what are the objectives of management accounting? We have planning. So planning can be short-term or long-term, and it should be done in order that the set objectives can be decided on how and how they can be met and how to meet them. Sorry, I think there was some omission there. The role of management accounting system is to provide information for what to sell, where, and at what price. Management accounting is also central to the budgeting process of any organization. So planning, budgeting is an aspect of planning, because when you budget, then you are planning for the future. You want to set goals. You can set goals through budgeting, that you want to realize this within a given period of time. So that is planning aspect of the management accounting. Then we have controlling. Management accounts information enables the firm to concentrate on its on each achieving its objectives by identifying which areas are performing and which ones are not. So as I said yesterday, before you apply your controlling decision as a manager, you must understand what you need to control. So when you have costs of various items or various services that you are offering, then you are able to see which areas that require control. And then you can decide on how you can control on such areas, costs relating to such areas. So it's through this management accounting process that we are able to do that. Now, this objective applies to all managers, whether marketing, human resource, all managers require this information for planning purposes, for controlling purposes, because now you put yourself as a human resource manager. What are some of the costs that you may want to control? All right, so you look at that. For example, the medical expense that is paid to staff, you can do it directly by paying monthly medical expense, or do an arrangement with a given hospital, so that whenever this patient or the staff member falls sick, is taken to that particular hospital. So the payment is done directly to the hospital on admission of the patient. So you weigh the two options, but you must look at the logistics. What are we paying currently to the staff, or what if you were to pay them? How much would that cost the organization to pay them on monthly basis? And then look at if you are to pay the hospital, how much would, that's a human resource aspect, isn't it? It's a function of a human resource. So you check what would we be paying to the hospital if we are to make an agreement with the hospital, so that whenever a staff falls sick, they're taken there. How much would the organization be paying probably on a monthly basis? So you weigh the two, and the cost benefit analysis. You see, you settle for the option that is actually viable for the organization. So that's a scenario where you have to collect costs that you are likely to incur from both sides, and then make informed decision. Now, there is the organization. Management accounting system should produce the right information at the right cost and at the right time, and the organizational structure should be such that immediate use of it is made. So information from our previous studies, we know information is relevant when it's provided in good time. So if you provide information that is supposed to be used by the managers to make decisions, if the information is provided later than it was required, then that information is irrelevant. So timeliness is a very important aspect in management planning and controlling, because the information is actually for the decision to be made in good time, then the information has to be availed in good time or timely, so that the managers can utilize that information to make a decision. So communication, so the structures, the levels through which the information flows before it reaches the decision maker, all right, have to be checked. And they should be fast enough so that the information reaches the user in good time to enable the user make decisions in good time, or for the information to be relevant to the user, or for decision purposes. So this is very important. The organization, particularly the structures that are in place, should enable the information flow. Whoever is providing the information and the user of the information should be timely, so that it is relevant for decision making. Then communicating, the existence of budgetary and management accounting system is an important part of communication process. Plans are outlined to managers so that they are fully aware of what is required of them, and the management accounts tell them whether or not the desired results are being achieved. So communicating, this is it has an aspect of ownership. if you are a manager and probably you're working on a budget, then you need to be all-inclusive. Get feedback from all these other stakeholders, including the employees, those people who are working in various areas of the department, so that you come up with a budget that is all-inclusive, all-inclusive budget. And when the budget is all-inclusive, then people will strive to achieve the targets, the set targets, and they will be motivated to achieve those targets. So assuming you are just imposed with a budget and you're given targets, which you did not participate in setting them, then it becomes a problem because you may not understand how that was arrived at. But if your input was sourced, then you'll be in position to honor those targets that are given in the budget and be able to work towards realizing those targets. And then you will be motivated at the same time. So it's very important that we get information from all these stakeholders that we require for us to plan for the future and to set targets for the future. Now we have motivating. Targets included in any system should be set at such a level that managers and people who work for them are motivated to achieve them. Okay, and as I said, we all should be motivated to achieve the set targets, and that's why, how do we achieve this? Through a participatory budgeting process, where we have people who are supposed to play some roles in implementing this budget to be part and parcel of the budget preparation process. Now, this is actually the objectives of management accounting. As we have seen earlier on, we have also the objectives of financial accounting, which you can see are basically they enhance the achievement of these particular objectives of management accounting. When you talk about tax, then you have management accounting. It provides on how you can plan now for payment of that tax. All right, how you can plan for paying of that tax. So it's again a management aspect, because you have to check your liquidity levels and decide when to pay. Of course, you have also to check the legal provisions with payment of tax and all that. So all those aspects come into play, and they enhance the decision-making process by the managers who are supposed to be using this information to enable them make a decision. Any comments? Any comments by show of hand? Yes, Waistina? Yes, Zela. Gutu, yes, Gutu. Gutu, can you say something?
Okay, yeah.
Yes.
Can you hear me?
Yes, yes.
I have a question. My question is,
Yes.
there is no forecasting in the managerial accounting objectives. Where can we put forecasting using different techniques in this scenario?
Forecasting.
Yeah, yeah. Where do we put that? In managerial accounting, or I think it's in managerial accounting, but you haven't listed that on the objectives.
Now, okay. So that can be discussed under budgeting, because when you budget, it's like you're focusing, isn't it? You budget for what you want to achieve in future. You know, when you are doing something that you want to achieve or to implement in future, then that is forecasting. So we make budgets through forecasting, isn't it? we look at the history, and then we can base on the history to make the forecast. Just like the regression model, we look at the current situation or the historical situation, and then use the historical situation to project the future. All right, so budgeting is now the outcome of the forecasting. Any other comment or question? Raise your hand. I'll be able to unmute you. Yes, yes. No comment?
Hello?
Yes, yes.
I think also planning is for forecasting, because we have to plan short-term and long-term plans. So that is forecasting for the next 10 years, the next 5 years. For the long-term plan is also forecasting. So forecasting are included into planning.
Forecasting is included into planning.
Yeah.
Yes, yes, yes. Forecasting is under planning. Just as budgeting is under planning, isn't it?
Yeah, budgeting
Just
also
as
under
budgeting
planning.
is under planning.
We have to put
Yes,
a budget to do or to overtake the plan for the forecasting plan. That is a facility. Budget is facility.
Yes.
So
yes.
Planning is for forecasting, how to achieve for that things or that objectives. So the budget is a requirement to be material or money.
So you're right. Good. You're right. So forecasting is under planning in the objectives, among the objectives of management accounting. Just as budgeting is under planning, because it's an aspect of planning. And again, budgeting can also fall under controlling, because when you budget, you set targets. And when you set targets, you tend to control now the expenditures, for example. They must be within a certain level. And then that is controlling. So, you know, they can fall either on this, okay? But forecasting is under planning. Budgeting is also under planning. Budgeting can also be under controlling. Budgeting can also be under organization. You see, like it cuts across communicating, motivating, because when you have a budget, you motivate the user. So it's only how you prepare the budget. That's why when you shall be looking at the budgeting, we'll talk about different types of budgets and how they are prepared. Any other comment? Thanks for that contribution. Any other?
Yes, doctor.
Yes, yes, welcome.
Yeah, just as to me, this forecasting or planning is, come from the interdepartmental offices. That means maybe, as a general term, it's from marketing department, because from the very beginning or at the beginning time, there is a plan as a whole for the company, and marketing department will forecast what they have in the future. And then as per this plan, every department contributes their own plans, or, they will do according to the marketing department. So what marketing forecast, the finance department budget as per that marketing estimation or forecasting. Otherwise, there is nothing.
That's a very good observation.
Yeah, otherwise there is nothing, you know, just financial department, there is nothing to plan or there is nothing to forecast. But as per the whole organization can plan for the future, what they want to produce and what they want to sell. So as per this, all departments will be ready for every forecasting. So the purchasing department is ready for purchase, finance department prepare the budgets, and other departments or this production department may be ready for production. So it's, you know, interlinked or interdepartmental functions. Thank you.
Very good. That's a very good observation. And that's why I say all managers, whether marketing or production. Yes, yes, who's agree?
That's Nile, yeah.
Yeah, okay.
Because the planning is the head of the organization, first of all, not under marketing. Marketing have its own plan. From the organization, the all over plan, we have to classify into the departmental. So first of all, it comes first planning. After that, the plan, how to success this plan, we have to budget a budget, human resource, material resource, or money. The market also from a plan. After a plan, it comes. That is in the plan, there are marketing plans. How to maximize our profits. So first of all, it comes planning. Plan is the head of or the indicator of the organization's success. After that, how to achieve the plan, we have to create different departments, different work units or job descriptions. So plan is for forecasting, we have to say, first of all, forecasting. Forecasting is under planning because we have to forecast for the next year, for the next 50 years, all over all the country, the company, to forecast his income, or he have to lead his success. So first it comes planning. Planning means our target, our views, or success, what to be objectives. How to achieve it? We have to differentiate, or we have to classify in different views. Thank you.
Thank you. Yes, that's also another good observation. Any other reaction to that?
Yeah, Doctor.
Any other reaction? Yes. Welcome.
I will agree with Nathaniel.
Yeah.
Because forecasting is the main job of marketing department, I think, since they should have something to achieve, they should forecast what to achieve. And based on that, they evaluate their performance, I think. Since forecasting based on the past performance, they take what they got from the past, from the financial department, and the forecast from that. So rather than putting forecasting under management accounting, I would rather put it under marketing management or marketing department. So I would go with Nathaniel rather than Sor. Thank you.
Okay, that's good. I can see we have other two. Who is yes?
Okay.
Yeah.
In the first place, we need to consider the purpose of the company or the organization. For example, any kind of organization will have a strategy to do in the next years, maybe in the long run or in the short run. Therefore, it will have a strategy to perform. Then it will prepare strategies, marketing strategy, sales strategy, whatever strategies. Then it will allocate resources so that it can perform. The case or the concept of budgeting comes here. In order to perform a plan, we need to allocate resources. One resource is financial resource. We need to then prepare budgeting. In this case means we come to the concept of accounting in this case. Therefore, forecasting, planning, forecasting, and budgeting are interlinked, as I think Natnaal has already said. This is my saying. Thank you very much.
Thank you. Yes. The other two contributors, yeah.
Can I say?
Yeah.
Yeah, one second. Yeah. The very good points are actually being raised. Whenever we are trying to compare and contrast forecasting and planning, of course, forecasting is not directly under planning, but it is like the preparation which gives us very good pointers to make our planning great and excellent. So we first forecast what's the trend, the pattern in the future, and then once we have those forecasting pointers, with those pointers, our planning will proceed and the planning will become great. Rather than we simply plan, we first forecast what looks like the future. And then if we are great forecasters, we can also be great planners. So I think forecasting is like the infant stage of planning. Thank you.
Thank you. Yeah. There was also another hand. Yes.
Doctor, can I add some more?
Yes, you're welcome. Yes.
Okay, just I was saying, whenever we talk about budget, first we should do the market research as an organization, because once, we are a business company, just, we are here, to do business. So the marketing department expects us to bring the marketing research and the forecasting of the future plan. As per that, every department should bring their own contributions. Let's say, for example, if you are a shoe factory and we have planned, or as per the market research, let's say 100,000 shoe we want to bring to the market as per the marketing department research or forecasting plan. Each and every department, let's say, for example, the procurement department will buy for those raw materials. For these raw materials, the finance department will budget for that. And the production department prepare all the human, the HR department also, prepare everybody to do these 100,000 shoes. So as per this plan, we are, to do everybody, just, assigned everything or all resource allocation on this matter or in this plan. So this is what we are, budgeting, or what we are, doing business in the finance department. This is my idea. Thank you.
Thank you. Okay, that's a good contribution also. Any other comment, contribution?
Can I add something, Doctor?
Yes, welcome, yes.
Yes, normally, I think when we talk of management accounting or financial accounting, we are thinking of the existing organization for some specific accounting period. Existing organization for some specific accounting period. That means, in my experience, normally we do like this. We do, for example, for the successive budget year, we get the marketing forecast, but this marketing forecast has to be in line with actually the main, the main strategic objectives of the plan. It must be in line with that. But when we think of this financial accounting or management accounting, we must think of some specific operational period, but it must be aligned with the main strategic objectives of the organization. So what we do, we got normally this marketing forecast, and based on that, we got, the operational plans. Or operational plans means all the operation department, finance, all department will have its own plan. Then based on each department's plan, everybody will get budgeted, every activity will get budgeted, and the budget will get approved and actually debated, seriously debated, because you see, budgeting might be even accumulation of resources. Maybe if I budgeted wrongly, maybe 100%, the organization will get forced to put that money for the next successive year. So that is misusing of money, just if I wrongly budgeted. So it will get seriously debated. Then after that, it gets approved. Then if it is going to be changed from the planned activities and from the budgeted activities, even each planned activity and budgeted activity has to be approved by the board or general manager. That has to get back to the finance with budget codes. Then if, for example, any departments want to use that budget for that planned activity, it will refer to that budget code, which is approved actually. Then it can only use that amount of budget. If it is going to be, if the department wants to change any amount or activity, even it must get approved by the general manager or the board, which has approved the budget in advance. The key thing, in my experience, that I got in preparing budget is the budget has to be as exhaustive as possible, and it must be as participatory as possible. Budget has to come from bottom to up. Normally, we do from every rank and file level. What are the critical activities that we are going to do in the next budget year? And we collect that information, pile up the information to the other level, to supervisor level, to mid-level manager level, and go on accumulating to the general manager level. And the key thing that I experienced is this budget participation and accumulating and getting the final budget is a key thing in one accounting cycle, in one accounting period of an organization. Thank you, sir.
በትምህርት ከፍ ብሎ መብረር ይቻላል። ናሽናል አቪዬሽን ኮሌጅ የናሽናል ኤርዌይስ እህት ኩባንያ ከከፍተኛ ትምህርት አግባብነትና ጥራት ኤጀንሲ ሙሉ ዕውቅናን ባገኘንባቸው በማስተርስ ዲግሪ MBA በስትራቴጂክ ማኔጅመንት፣ MBA በባንኪንግና ፋይናንስ፣ MBA በቢዝነስ ሊደርሺፕ፣ MBA በሪስክና ኢንሹራንስ፣ MSc በኢንተርናሽናል ትሬድና ኢኮኖሚክስ ዘርፎች በእውቀት ለመቅረጽ የበቁ ፕሮፌሰሮቻችን አረንጓዴ መብራታቸውን አብርተዋል። በነገራችን ላይ በኬንያ ሀገር ከሚገኙ ስመጥር ዩኒቨርሲቲዎች በሚመጡ ፕሮፌሰሮች የትኩረት መስክ ትምህርቶቹ መሰጠታቸው ልዩ ያደርገናል። በምርጥ የትምህርት ስርዓት የተገነባው ናሽናል አቪዬሽን ኮሌጅ በመጀመሪያ ዲግሪ በአቪዬሽን ማኔጅመንት፣ በሆቴል ማኔጅመንት፣ በአካውንቲንግና ፋይናንስ፣ በማርኬቲንግ ማኔጅመንት አስተማማኝ ትምህርት ይገቢውና ራስዎንና ሀገሮን ይለውጡ። አድራሻ 22 አደባባይ ወደ ሾላ በሚወስደው መንገድ ላይ ናሽናል አቪዬሽን ኮሌጅ የናሽናል ኤርዌይስ እህት ኩባንያ ህልሞን እውን ያደርጋል።
That's a very good contribution, and just to summarize all the discussions, I agree to all the contributors. What you are saying is every organization has its own goals. And when we create departments or functions in the organization, we are creating those functions to enable us achieve the organization's goals. Now, the goals can be broken down into short-term and long-term, all right? So how do we realize the goals or the objectives of the organization? And again, we should also realize that finance department is core to every organization. It's a core function to every organization. Just looking at the objectives of the finance department, because we have to provide information about how we are performing, all right? We have to provide information so that the rest can also use that information. The outsiders can use that information to make decisions. We can produce information through management accounting process that can be utilized by the managers to make decisions that will move us forward or will make the organization realize its objectives. So finance department is core to every organization. Now, as you are saying, planning, every department can have its own plans, but all these plans end up having a financial implication. The financial implication, all in one way or the other, must affect the finance department. Because when you are planning to execute this, you are planning to realize this, of course, there's a finance implication. You have to incur some cost, all right? You have to hire people to execute that we want to achieve. So that all together has a finance implication. So it must affect the finance department in one way or the other, because they're the ones who control the finances of the organization. They are the ones who manage the finances of the organization. So that's why, and I like the last contribution where we said that a good budget is a budget that is all inclusive, it's participatory. That means we have budget committees that are charged with the preparation of budget. So a good budget committee must have a representative from every department, so that the plans for each department can be addressed and taken care of within the budgeting process. Then there is the approval level. So even preparation of budget has different levels. We have the preparation level, we have the approval levels, and approval is normally done by the board of the organization, and the explanations have to be given to convince them that actually this is a realistic budget that can be implemented. Now, the issue of the structure of the organizational structure is very important, the organizational structure. How does this budget come into being? So the structures that are in place that the organization has is very important, because the structures that will enable a communication between various departments of the organization to be able to be linked together and come up with a comprehensive budget. So the structures and the committees that the organization may have will always work towards achievement of the overall organization goal. So every organization, the bottom line is, and as I said, whenever you are planning, whenever you are controlling, whenever decision you are making as a manager, all right, should be making this decision to the interest of the organization. And again, before you make any decision, before you start making any decision, you must have an objective that you need to achieve. So every planning process must have an objective that needs to be achieved. So it's just the main objective, and then broken down into pieces of the objectives that are now aligned to each and every department of the organization. So budgeting actually collects information from all these departments so that it is utilized or taken care of within the budgeting process, so that we have a budget that is agreeable to all the departments, all right, the implementing departments and the executing departments, so that we have now a comprehensive budget that is acceptable and is motivating to every department. I think that is my take, and that's what I can give for this discussion. Any other comment or contribution? Hello, are you with them? Are you with me?
Yes, yes, we are with you.
Yes. Now, we can now talk about, they have a question there. Are you able to read that question?
Yes, doctor.
Discuss the management accounting guidelines and considerations and show how they may influence the decision-making process by a manager in a corporate organization. Yeah. That's a question for the day. What are these, some of the guidelines are as a manager? You know, this is a multidisciplinary question. You look at it from your point of view as a manager. And then now you try to explain what you need probably to have or to consider, or what you should be guiding you in terms of utilizing the information that is provided through the management accounting, and then now being in position to make a decision relevant to your area of department. Is that manageable? Yes, 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 yes. Is that manageable? Discuss the management, accounting guidelines and consideration, and show how they may influence the decision-making process by manager in a corporate organization. A corporate organization, I chose corporate organization. What's a corporate organization? This is an organization that is that you may find all these systems applied, you know, or in place. Like you may find the organizations where they don't have even the management accounting department. But a corporate organization, you find mostly that is very important because they have to make decisions. A corporate organization is a wide organization which may have several departments. So we may have marketing department, we may have human resource department. That's why I chose corporate organization. Assuming it's a single run organization, a single-headed run organization. So you find the same person is the one doing marketing, is the one doing planning, is the one finance, controlling, and all that. So that is not a scenario I'm talking about here. I chose corporate organization because it's an established organization which has the legal provisions and protection, and which is an entity in itself, and of which managers have to make decisions for the interest of that organization, not for personal interest. Assuming it's an own organization or an individual's organization, then the interest, the decisions that you'll be making will be somehow favoring you as an investor. But here it's an organization, so you are doing it on behalf of the shareholders. That's why you are an agent, and then the shareholders are the principal. All right, the agent's theory. How do you find this? Any contribution? Is it doable? Yes, hi, Maton. Is it Galax? Someone raised a hand. Yes. Your name is not appearing. The phone name is the one appearing. Galax JB. J8. Yes, Galax JB. Yeah. Good. Come up. Unmute. Unmute, please.
Okay, I'm welcome now. Can you hear me now?
Yes, yes. Yeah.
Can you hear me now?
Yes, yes. You have unmuted again. You have muted. Yes, okay, now you can talk.
Actually.
Huh?
Can you hear me now?
Yes, yes,
Can you hear me
I can
now?
hear you. Yeah, yeah. Go ahead.
You can, yeah. Great. Yeah, great. Thank you very much.
Yes.
As per my understanding, perform is that we identify corporate organization and then we review their management accounting guidelines and considerations, and then we judge if that accounting guideline influence the decision making by the manager. Is that the question? Am I getting that?
Yes, that's the question. That's the question.
Yeah. So, yeah, we can corporate organization and discuss that way.
Yes, Gutu, I think is disconnected. Gutu, come up.
Okay. Thank you for the chance.
Yes. Yeah, clear. Yes.
I think management accounting consider, like for example, demand in the market to produce how much to offer or to provide for the market, and the supply that's available in the from the suppliers, and on this consideration, they make a decision how much to provide or how much to offer to the market, and how much to produce from their production company or from the service, from their service. So they consider things like this, I think.
Okay. That's yeah. Good. That's a good contribution. Good. Any other? Now, I'm the opinion that each one of us can go and work on this, and then probably it can be our first assignment. Hi, Maton. Yes, hi, Maton, come up. Unmute, please. Good, yeah.
Yes, sir.
Yes.
Normally, in my thinking, the guidelines of management accounting, normally it must get information from the financial accounting and from the cost accounting perspective. This must be one of the guidelines to be considered, just as a management accounting. The other thing is this is used for decision making, actually. This is one of the guidelines, and this decision has to align with the objectives and goals of the organization. So this is one of the guidelines to be considered in relation to this management accounting. And when we think of considerations, the considerations in my feeling is to reduce cost of production and to increase profitability. And so that all the stakeholders, all the financiers can get satisfied and get higher profitability. So all management accounting through decision making, the stakeholders has to get satisfied through getting maximum profitability, or by actually in both ways, by reducing cost of production or by increased productivity, just through this management accounting tool, decision-making process through management accounting tool. So that's my feeling in short.
Yes, that's a good observation. Now, as we are saying, it's provision for information to managers to make decisions. Now, managers, before they make decisions, they also have to have some consideration. Before you make a decision, you look at, for example, the cost benefit. We may sometimes be guided by the benefit that we are going to accrue from the project or whatever item that you are selling vis-a-vis the cost, so that we gauge the cost vis-a-vis the benefits, and then we make our decision against that. We can also be guided by the structure of the organization, because different organizations have different structures. So the organizational structure may influence the decision. As we have said, the information has to be timely, So managers dictate the information they require to enable them make the right decision. So you need to, the structures will affect the availability of the information that is required for the decision-making process. So that has to be considered in a way that the structure should enable the flow of information to the user to be timely, so that we enable them make decisions in good time and decisions that are relevant at a given time. So that, among others, are discussions that you can talk about this. And I want to give to everybody so that you can go discuss. I know you are from different areas, marketing, whatever, leadership. So you can apply your area to this and probably bring out your discussion so that you can go through that in our next meeting. Probably I can give this as the first assignment so that it can be submitted as part of your coursework. How do you think? Hello?
Yes, doctor.
Yes. No guess.
That's fine.
That's fine.
Yeah, we can do it as a group of 5 or 6, and we can use this platform as well.
This one to be taken as a group because it's an open-ended question, and contributions from members. It's a way of learning from each other. So I encourage that as part of this course, because being a course that is multidisciplinary, so it's good that people get to hear from others and what they're doing. So I would encourage group assignment.
ልዩነት መፍጠር ዓላማችን ነው። ዓለም አቀፍ ተወዳዳሪ መሆን አለባችሁ። የናሽናል ኤርዌይስ እህት ኩባንያ ናሽናል አቪዬሽን ኮሌጅ ጥራትና ደረጃውን የጠበቀ ስልጠና በመስጠት ብቁ ዜጋ ያፈራን ነው። በፍላይት ኦፕሬሽን፣ በበረራ መስተንግዶ፣ በቲኬቲንግና ሪዘርቬሽን፣ በሆቴልና ቱሪዝም ሙያዎች አሰልጥነን ተወዳዳሪ እናደርጉታለን። ኮሌጃችን ካናዳ ከሚገኘው ኢንተርናሽናል ኤር ትራንስፖርት አሶሲዬሽን አያታና ከእንግሊዙ ICM ጋር በመተባበር ዓለም አቀፍ ዕውቅና ያለው ስልጠና እየሰጠ ይገኛል። በፍላይት ኦፕሬሽን በበረራ መስተንግዶ የምንሰጣቸው ስልጠና ከኢትዮጵያ ሲቪል አቪዬሽን ባለስልጣን ሙሉ ዕውቅና አለው። አድራሻ ከጎላጉል ታወር 22 አደባባይ ወደ ሾላ በሚወስደው መንገድ ላይ የናሽናል ኤርዌይስ እህት ኩባንያ ናሽናል አቪዬሽን ኮሌጅ ህልሞን እውን ያደርጋል።